All right, let's get into it. Today, we're diving into the Motley Fool's blueprint for building an investment portfolio that can handle pretty much anything the market throws at it. This is about being panic-proof. You know the feeling, right? You see red all over the screen, your stomach just drops, and this little voice in your head starts screaming, "Get out! Sell everything!" It's a totally human reaction. But what if I told you the biggest danger to your money isn't the crash itself? And that really gets to the heart of the matter. See, according to the Motley Fool, the real problem isn't market volatility. It's us. It's how our brains are wired to react under pressure. Let's be super clear about this. The single most destructive thing you can do to your long-term wealth is selling good companies out of fear during a downturn. You're basically locking in your losses. The solution here isn't some secret stock tip. It's all about changing your perspective. And this shift in mindset, well, it's the foundation for everything else. It all comes down to a really simple question about who you are when you put your money into the market. This right here, this distinction is absolutely everything. Ask yourself, are you buying a small piece of a real company, one with products, customers, and a plan for the future? Or are you just betting that a ticker symbol will go up? How you answer that changes the entire game. And here's what that looks like in the real world. An investor, they're thinking in years, maybe even decades. They care about the business itself. A speculator is thinking in minutes or days, and they're obsessed with the stock price. One is patient, the other is impulsive. So, which one do you think hits the panic button first? This is where the true investor gets their edge. Being a contrarian just means you're not afraid to go against the crowd. When everyone else is panicking and selling off perfectly good companies, the investor leans in and thinks, is there a bargain here? It's about zigging when everyone else is zagging. Okay, so we've got the mindset down. Now for the fun part. How do you actually build this thing? This is the practical nuts and bolts blueprint for a portfolio that's built to last. Look, a strong portfolio isn't about finding one magic stock. It's like building a team. You've got your steady, reliable blue chips, the big, stable leaders. You've got your dividend payers that are constantly generating cash for you. Then you have your small caps for that high growth potential. And of course, your international stocks to make sure you're not putting all your eggs in one country's basket. So, is there a magic number for all this? Well, the Gardners suggest owning at least a dozen solid companies. And the key word there is solid. The whole point is to have enough different quality businesses so that if one or two have a bad year, the rest of your portfolio can easily pick up the slack. This chart gives you a great visual of what that balance can look like. See how there's a really solid core of stable companies, but it's balanced with other pieces designed for growth? The goal is simple. You don't want to be so heavily weighted in one area that a bad day turns into a total disaster. This is how you sleep at night when the market gets choppy. So you've built this awesome portfolio. Now for the hardest part, doing nothing. Seriously, this next bit is all about mastering the most powerful and most underrated investing skill there is. Here's the truth. The work that keeps you from panicking is done before the storm hits. You go in knowing that markets will go up and down. It's normal. You train yourself to ignore the hot new trend everyone's yelling about. You check in on your investments, but you don't obsess over every little tick. And you always keep your long-term goals front and center. That's your anchor. This is really the final piece of the mindset puzzle. Market downturns aren't a bug, they're a feature. They are going to happen. And if you've built your portfolio the right way, it's literally designed for these moments. It's made to bend so it doesn't break. All right, let's pull all this together. We've talked about the mindset, the structure, and how to act during a storm. So, what are the simple, actionable things you can do to start building your own panic-proof plan? It really comes down to these 4 things. First, know why you're investing. What are your goals? Second, build out that diversified team of stocks we talked about. Third, let your money work for you. Reinvest those dividends and let compounding do its thing. And last but not least, never stop learning. The world changes and great investors adapt. So as we wrap this up, the big question isn't just about what the Motley Fool says, it's about what you're gonna do. Is your first step to really define yourself as an investor, not a speculator? Or maybe it's time to take a hard look at your diversification. Or is it just committing to yourself that you'll stay the course next time things get scary? That first step, it's all yours.